Let's now turn to the issue of investment. A lot of people are investing in the stock market. Warren Buffett, the world's richest man, thinks that we're at a bottom, and he says that he's started to buy. What is your view of the stock market investing? Are we really at a bottom? Is now an opportunity for us? Things going to get. What's your view of this? Do you agree with Warren Buffett?
Bear markets, probably since the Great Depression, it's amongst the 2 or 3 worst bear markets in the past year now, with stocks generally in the US and Canada now down 42% or so. I think what's happened recently is we saw a lot of distress sales, panic selling, forced sales to meet investor money market redemptions or margin calls. So that's put extra downward pressure on prices. And I think a lot of stocks, certainly blue chip stocks, once we come out of this economic downturn, will be at higher values than they are now. The question is, though, do you want to face the risk of further declines? Because I think we would all agree that the risks to the global economy now are still on the downside, that we could experience a much worse outcome than we envision. And if that's the case, stocks will continue to fall. So it's a question of when. I think what you want to do is first get a sense that U.S. housing markets are stabilizing, house prices are stabilizing, because then it's over, the worst is over. And then you want to dip into the stock market and start building your portfolio.
If we are right to worry about those car loans, student loans, and then credit card securitized loans, then I wouldn't touch the financials just yet, because there could be some more stress for financial stocks, including Canadian banks, less than the American, but still that. The more defensive type, so the food producers and retailers, those things tend to be, and the pharmaceuticals, those things tend to be more stable. The high dividend paying stocks, I think at this point, are perhaps the best bet. The public utilities, the pipelines, things of that nature, the more stable. As Sal said, I think it's way too early to call the bottom for the market, so I wouldn't be jumping in right now. In fact, for now, I would be staying on the sidelines.
But they normally bottom about 6 months before the upturn in economic conditions. So, if that is the general agreement, we tend to be saying that by the middle of next year, we'll sort of be getting out of this and starting to improve. So, most likely, we probably do have some more downside for another 2-3 months, but we're essentially close. When we look at it on a valuation basis, I mean, normally the valuation, you compare prices to earnings. The problem now is nobody knows what the heck the earnings are going to be because they're all slashing. They're all disappearing. So let's look at another measure, price to book. So how much is the value of the company worth to its book value? How much it has on its balance sheet? And looking at those kind of valuations, we're essentially at historic lows. Okay? Can it get worse from here? Yes. But so in terms of valuation basis, we're there. The problem is everybody's still fearful. We don't know for sure how long this is going to be. Okay? And I would say that the one key measure to focus on if you are thinking of investing, doing any type of investment. Carlos earlier talked about wholesale funding, the costs for the banks. The key thing to focus on would be what is called the TED spread. And the TED spread is the difference between 3-month T-bill in the United States and a 3-month LIBOR, which is the cost of funding between the banks.
So when you see those spreads
when
narrow,
you see those spreads narrowing, and if you look at the history of that series, of the TED spread, over time, from the beginning of time, the normal spread tends to be about 60 basis points. Hold on, 60 basis points. Right now, we are well over 200 basis points.
Right.
And
That's good. That's good.